Hello folks, this is Michael Huddleston with a Pro Traders Club entry for September 6th, 2012. Alright, this is going to be a real quick one, guys. I will be omitting the cable review, and I'm going to leave that for this Sunday's market review. So, again, quick reminder that we will not be doing a market review tomorrow night, and number one, because we're trading no more for the rest of the week for me personally. The non-farm payroll coming out on Friday is an event I don't trade, so there's no rush to get into the analysis anyway. So my week is done, and actually this week my objective that I usually aim for, 50 to 75 pips. Yeah, that's right, 50 to 75 pips is all I aim for. It's very, very low, very realistic objective for a weekly goal. And I can do all the amount of money that I would ever need to make. I can do that on 50 to 75 pips per week, and I'm not rushed to get in there and take a trade every single day. Hopefully this week has been a means of illustration showing you that you don't have to have a bias. I particularly find a little bit disappointing as a mentor that folks are still hung up on a bias. Okay, if you're struggling as a new developing trader, don't be so focused on having a bias versus having a consistent approach to doing the same thing over and over again. And that's what I was doing. I really intentionally tried to trade against the overall directional premise from the higher time frame, that being bullish. Okay, for the last several weeks it's been going up and up and up in fiber and cable, and I chose to place a trade net short against the grain just to prove that even if you are against a higher time frame, it's still applicable in terms of the tools. You still find pip hauls out of the marketplace, and you don't need to be doing it every single day. So again, we're just going to be reviewing the dollar and the fiber tonight. So let's get with this so I can get done and have dinner, guys. Right, we're looking at the dollar index. We were looking at the 81 level in here. That was one of the levels that I was looking for a possible bounce and to present a trade, at least to facilitate a short. And this offered short-term support today. I do suspect, obviously, that's what we were talking yesterday, that we will go down to that 80-70, 80-80 level, and what we do at that point obviously is left to be seen. We do have this low up to this high. That range we're still trading within, and we could go much deeper in terms of retracement, which would allow further upside for cable and fiber. That's certainly not a limitation on taking short-term scalps on the downside still, because there's a lot of folks in here that's still trying to find the top, and they'll offer opportunities for you to have retracements and still continue to press higher in both fiber and cable. So if you are a little lackadaisical and you don't want to be in there being an aggressive trader, just stick to looking for buys. That means looking for the Asian range high or less for your entry points, and look for confluences of support to get yourself a long trade in either fiber or cable. All right, and obviously if you're a bear, you demand more for your sell signals. Okay, so obviously what I'm saying here is I do suspect that we will see continued weakness in the dollar, and it may be spiky and erratic because of non-farm payroll, but we still could see again that 80, 70, 80, 80 level down here. If we do take out these highs in here, okay, we would go back up to the 82 figure, which is one that I'd be interested in seeing because I think we'll have some setups form rather nicely in that area for all the majors, not just the fiber and cable. So that's one level to be watching, the 82 institutional big figure on your US dollar index. Okay, so let's move on over and take a look at the fiber. Okay, this is the fiber. We're going to look at the 5-minute chart on the right hand side here, and on the left hand side we have the 4-hour. Okay, now we were talking about the likelihood of price possibly running these old highs in here. Okay, and we're going to look at that in a moment, but I want to show you the intraday action that facilitated this setup. And we have the Asian range in here and the Asian range low. Okay, and we're going into London Open, and this level up here is essentially that level back in here. Okay, so this high here is what's being delineated with this line. All right, and we were talking about how stops were resting above that level, and again it'll look more familiar to you because I'm really zoomed in tight. I want you to see the price action that was underway going into this setup. So we have price move up outside of the Asian range, dipped back down inside the Asian range again. Now if you were a buyer only, okay, looking at this, you may have been lulled into looking for a long. Okay, but had you done that, it's still a short-term scalp that could have manifested for you. Okay, this is a nice optimal trade entry. Let's put that on here just for the sake of completeness, because we do have a little bit of time since we're not doing the cable. Okay, we do have optimal trade entry in here. Okay, 90 level down here, converging with the 126 figure. So we did have a nice area to look for short-term support to hold off any further decline. So had you taken an entry around the 126.06 level as a long, you could have took profits here or looked for an opportunity to get a push above this level we had noted. But again, that area had a large potential of stops resting above it. So one would have to be very careful about holding on to longs in here, because we may see a deep retracement, which is essentially the setup that I was stalking. Okay, and we were talking about that the last 2 days in market reviews. I was looking for a short, and let's continue on with the price action. Okay, price came all the way back from running out this high all the way back down and gave another optimal trade entry in here, low to high. So let's take a look at that. So again, just for short-term scalping, okay, just short-term little intraday moves in here, you could have gone long again here around that 126.08 level. Okay, is your sweet spot, or just simply using the 126.10, and that could have been facilitated back here as well. Looking for 25, 30 pips. Moving forward, let's take this off. Okay, and price shot up right into here, and you're about to see where, obviously, where my entry was. But this high down to this low here is what I used for reflection. Okay, and reflection is a pattern I use for entry when I expect a turtle soup type event to unfold, where we were expecting an area in price where there'd be a large pocket of stops. Okay, and we were calling the 126.50 level, and which is the blue line noted here, which is really just the average daily range, which we'll see more clearly as we zoom out. But I just want to draw your attention to the short-term price swings here on a 5-minute chart. But we are expecting price to run above this level here and run any potential buy stops and just suck in any breakout artists that would have been utilizing this old high back here to get long. Okay, and again, we would be looking for a retracement once we get to that point. And if you took any of these short-term buys in here, this would be an area for you to take your 25-30 pips and bank it and move to the sidelines, or if you were willing to hold on to it, move your stop to break even, and having had your 25-30 pips on first profit, then you're basically in a free trade with 1% or whatever the half position would be, from your original position entry. Just use double tap, in other words, if you know what I'm talking about. If you don't, just go over the videos and you'll see that double tap is covered. Alright, so by using the reflection pattern on this swing here, that's this high, pull down to that low. Now you're going to keep your eye on this level here, because I'm going to pull the fib up until this level lays directly on that high. Okay, and you walk on over here and you can see the little arrow on that candle that gave me my limit order. And let's move forward in time. Okay, price immediately snapped back inside of this range below it again, ran out all the way down on the other side of the Asian range low. Okay, now if you look at how price gave you a couple opportunities in here, it gave you an opportunity to get an optimal trade entry in here on this candle. So you could have done that as well in the New York open session. Okay, so if you didn't do reflection up on this candle, you could have done it on an optimal trade entry in here. Okay, so let's take a look at what unfolded. Obviously, having average daily range plotted on your chart, and then looking for the kill zone window, because you always got to expect, go back to that New York open session trading video that I did. It was a webinar. It's about an hour and 40 minutes or so. Really good teaching on how to trade the New York session. But they had several little short-term optimal trade entries in here, where we could have done some additional short-term scalping in the direction of this higher time frame false break. So we did see price go right up to that 126.50 level up here, and you can see that is the case here. 126.51 was the level it's being delineated here as well. But all that is the ICT average daily range indicator for a 5-day basis. And price moved right on down into the New York open kill zone. Okay, and we always expect a possible bounce, and because of the rate announcement event that was unfolding today, and the fact that I was trading against the higher time frame premise, I used the average daily range projected low down in here, and that being the 125.60 level. Okay, the high that we were shooting for as a potential upside, if we got above this level here, again, was the 126.50 level. Now, if we're trading the fiber, it's typically around a 3-pip spread, and I used basically 126.47 as my entry on a limit, with the expectation that if it did touch 50, I would more or less guarantee myself to fill on a short. And obviously, you got to take in consideration the spread on the downside, because you got to factor that spread of 3 pips in your exit. Okay, so when you're looking at your price charts, you're looking at where you would be selling. Okay, so the buy price, okay, that covers the short, is essentially the spread's difference. So it would be 3 pips above the projected average daily range low. In this case, it would be 126.64. Okay, so obviously, the easiest way for me to do that would be the 125.65 level. So if it did get down to 125.60, actually I thought that we would probably push down to 125.50, just more or less try to get a 100 pip range. But looking up at your average daily range today started off with the expectancy rather of 90 pips, and that's essentially what you got today. So that's how consistent the tools are, and that's how precise you can have it. It looks like laser guided precision, but again, this is all talked about in video format in advance. It's no hindsight trickery, no cherry picking, okay, no marketing strategies. Yes, I'm nudging you if you've read the forums today. I'm not selling you anything. I'm giving you this stuff for free, guys. Just take a look at it, study it in a demo account, and you determine if it has any wealth building capabilities for you as a trader. If you're going to put real money behind it, obviously that's up to you. I'm not advocating you do that, because I'm not a CTA. I'm not licensed to give trade advice. So obviously, looking at where price traded down to, we bounced rather handsomely at that point. I did tweet around the vicinity of the New York open session. It was around 9 o'clock or so my time. So I more or less was giving you the nudge to let you know that I'd have something pretty nice to talk about today. So not to brag, not to boast, but things did work out pretty good today. So again, it was just an illustration that you can trade a counter higher time frame premise. You just look for a solid setup, use your support and resistance levels, look for potential areas of stops, expect the raid, expect the manipulation on the parts of the dealers, central banks repricing after a particular higher low comes in the market, like we saw up here. And then obviously we've seen a consolidation as such. So now where do we go with this? Looking at the price levels over here, I don't know, to be honest with you. And because it's non-farm payroll, I don't know. I don't trade it, but I do suspect that we may probably see another push higher, and then maybe even a deeper retracement. So it's up to you guys to determine what you want to do. But if there's anything that I would advocate or listen to as far as my advice would be not to trade non-farm payroll, not just simply tomorrow, but every non-farm payroll. There's just simply no reason to be doing it. To me, it's a gamble. So it's pretty hard to get around these highs and lows, okay? And if you didn't know it in advance, you probably think it would be, fluff. But again, I'm kind of stuck in a way because I'm such a compulsive individual. I do have OCD and attention deficit disorder, so I have a lot of barriers within me as a person. And if you noticed, my video that I uploaded last night, it didn't have my typical closer. The little segment where it tells you join our YouTube channel and such. Now, I don't know the reason why it didn't post it, but it was in the rendering, but it didn't make it. And sometimes my videos have done that in the past, where the actual slides themselves will pause, but my soundtrack will continue. Okay, and that's what's happening. So here's where I'm stuck. It's driving me crazy that I want to go back in and fix that. Okay, but for me to do that, I have to take the video down that shows this analysis in advance. And because I know, much like today, we had some goofball on the forums, more or less chatterboxing, saying that I'm marketing something or whatever. I'm not marketing anything. I sell nothing, absolutely nothing, except for the dream. Okay, I'm selling you the dream of being a profitable trader in a demo account. Okay, I can't promise you it's real money, but if you learn these techniques and understand how price action unfolds on a daily basis, it may be profitable for you. Okay, but you certainly will lose money over the long haul, and I can't guarantee you profits. But I'm most likely going to have this video posted again, okay, and I'm going to leave the video that's in the thread, okay, like inside the thread, not on the very first page. I'm going to have that video um, I'm going to basically redo it, okay, but there's going to be two videos for this particular date, okay. In other words, September 5th, 2012's video will actually have two editions. One will have the front page. It'll show everything as I intended it to show, okay, but the uh, the original rendering obviously will still show up inside of the thread because I don't want that post to have any edit to it, because obviously when you edit a post it shows that you've edited it, okay, and I just want to have, you know, disclosure. I want to have clarity, and I don't want to have anyone to be able to say, well, it looks like you went in there and changed it and moved things around and put lipstick on it, because, you know, while this wasn't all that big, I mean, 82 pips is not the biggest thing in the world, okay, but that is my weekly goal, and I did it with, you know, I'm just going to basically tell you I'm pretty proud of the tools today. Not necessarily myself as the trader. All I did was just follow the rules. But I'm still, after all these years, flabbergasted on how absolutely crazy, insane accuracy you can get with this stuff. And it doesn't just work in Forex, guys. It works in the bond market, the S&P market, and stocks, commodities. And it's not limited to Forex. Okay, so I'm probably driving you nuts now because we're basically done with the analysis. So you probably could have stopped listening to me a couple minutes ago. But I'm going to close it here. And again, we're going to be doing a teaching session tomorrow night and every Friday, obviously. But if you want to see some kind of topic covered on a Friday, obviously, post it in the thread. And I can't guarantee we'll get to every one of them, or that I'll go in the order that folks posted up there. But if I see something that really gets me excited, also, I will skip my list of things I want to cover between now and next spring when we close the 2013 series of this video series. We have a good number of weeks where we're going to learn some some cool things. But again, Pro Traders Club is a daily thing we're going to be doing, and it's going to be hopefully something that you can glean insight from